Gartland Law presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hey everybody, it's Bernie Gartland. The name of the program is Taxes, the IRS, and You. And we present this program every single week to give you information that you may not hear from other sources. Normally we talk about people who have tax problems and credit problems or creditors hounding them, and we go into how to avoid them, how to handle them, how to get out of debt structure, how to get the IRS off your back. But that's not what we're going to talk about today. We're going to talk about something very positive. Dave Cole is with us in studio today, and he is probably the foremost expert in structuring retirement programs. And he's going to give you ideas for those of you who have money available to invest and how to instruct a retirement program that's going to be to your advantage. So welcome, Dave. And why don't you tell us a little bit about yourself and what you do with the structuring of these retirement programs?
Well, first of all, Bernie, it's a pleasure to be here today.
Thanks
for having me.
Right.
You know, for the last 15 years or so, I'm one of those guys that people don't know about that's behind the scenes teaching the professionals. You know, when people go into their CPA or their financial planner, they're there to solve their personal issues and challenges. And they're saying to them, this is what I want to do. Show me the tools and how to do it.
Right. Right.
And so a good tax professional or financial planner who cares about their client is going to dig until they find those tools. Well, they come to classes like the ones I conduct. So I teach realtors.
So the professionals are coming to you on a continuing basis for instruction. Good.
Absolutely. In fact, my classes allow them to have their professional credits to maintain their licenses.
Interesting.
So out of public's outcry for more information and more tools, a lot of professionals are attempting to learn what the solutions are so they can take it back to their clients. So I instruct them and show them what the options are. How is it possible that I can take a retirement plan and control the retirement plan and diversify it how I want to? And especially into real estate, which is something people are very interested in this economy.
And it's very interesting because my mind is clicking as you're speaking, because these professionals that people go to may not have the total answer. They go to you for further education and instruction on how to set up the proper and accurate retirement program for investment purposes. Is that correct?
That's correct.
Why don't these people know this before coming to see you?
Well, let's just stop and think about it for a moment, Bernie. Where does our financial education come from in this country? If you open up a financial magazine, look at the ads. They're mutual fund companies,
right.
They're stockbrokers,
right.
They're insurance companies, they're banks. They want your money, our money, because they want to sell us their products and services. Would it make sense for them to say, hey, Bernie, did you know that you can take some of your IRA money and invest it in real estate to diversify yourself? Well, that wouldn't make any money for them, would it?
Well, no, because they lose control over the investment strategy.
Exactly, and that's the important point, lose control. Because, see, they live by two rules. One, they work very hard to get control of your money. And once they have it, they work very hard to keep control of it. Right. So educating people like you and I that we have other options, that's contrary to what they want to do.
Yeah, it's almost the, what is that expression, the sin of omission rather than commission?
Yeah, exactly.
Okay. You know, it's very interesting because you just triggered a thought in my mind. As several years ago, a friend of yours and mine, Tim Berry, and I approached somebody who had $31 million in IRAs that he was controlling as the person in that business controlling those. And at that time, and we'll talk about this later, but at that time there was a concept of taking your IRAs and forming an LLC, putting the IRAs into the LLC, and then having the IRA holder be a manager of the LLC and get checkbook authority over the investment strategies. Okay, now that was about 5, 6, 7 years ago, and things have happened, which we'll talk about in a little while. But it was very interesting because we were talking to this broker, and he said, well, why would I want to do that and let the IRA holder, which is my client, control his investment strategy? Exactly. Where do I make my commission off of this? And I said, that's very interesting, because I started thinking to myself, so your client is not important enough to you that you would like to give some perfect strategy for. So that is a concept that you talked about, is that. Now, what do you cover in these workshops and seminars? You're doing nationwide, I think, aren't you?
Yes.
Okay. What do you do?
Well, basically, again, is try to give these professionals this information that brings them up to speed. And a lot of them think it's new information, when in fact, some of this is decades old. There's countless CPA classes where what we've taught them, they're not aware of at all, because again, their education comes from very traditional sources.
Right, right.
People are shocked to discover that for over 30 years, you've been able to take IRA money and diversify it into real estate. It's legal, it's allowed in the tax code as long as it's done a certain way.
Yeah, yeah.
But because they're taught to get control of the money, act like it's their money, not their clients,
right, exactly.
and keep control, they've never had this information brought up to speed. So I don't want people getting upset with their tax planner or their financial planner.
Yeah.
They simply aren't taught by the companies they rely upon for their services.
Yeah. It's very interesting, because I have an expression, and I have to be very careful at, is that I kind of, in my whimsicality, when I use a term that I end up unfortunately saying it when I'm out in the public, I said, so you educate these people. You educate them in terms of what they can do. And I would suspect that a true professional who had their client's interest at heart is going to relish the fact that you're giving them a new tool, a new arrow in the quiver to help them represent that client better than they have, better than the information that they've had prior to them going to your workshop and seminars.
You know, the thing I like most in my workshops for professionals is those ones that get excited.
Yes,
they're passionate about what they do. They want to do the best job they can for their client, and they can't wait to take this information back to their client and show them how to fix their challenges. That's amazing, because one would think that everybody would want to do that, and we find out that that's not what happens. So in this process, and are you what are the kind of professionals attend your workshops? You said real estate people before and CPAs. Who else attends your workshops? Well, I have a lot of financial planners.
Okay.
Registered investment advisors.
Right.
I have attorneys that come to my classes. Because again, my purpose isn't just giving them theory. We actually show them the tax code and the supporting documentation and walk them through the process so they can understand how it's done. And
at these seminars with all these, it's a very eclectic group that's coming in here. Is that some of them may already know some of this but haven't put it all together and need it as a refresher course, and I guess some of them are learning this for the first time and probably are getting excited about it, because usually people that are investment strategies and working with clients to do investments sometimes do get excited about what they can do for the client.
Right.
So how does that play out?
Well, again, the ones that really want to help their clients, that do care, not only do they want to take this information back, they want to get their client on track as soon as possible.
Right.
So I've had the privilege of working with professionals and their clients, hundreds and hundreds, all across the United States. So they now have a tool that allows them to have more control over their financial dignity down the road.
Right, and as soon as we get back from our break, and I hate to say this, Dave, somebody's got to pay the bills.
There you go.
Okay, so we're going to take a crash commercial here, but when we come back, we're going to talk about the steps that you need to take to implement this program. So everybody, this is Bernie Gartland. The name of the program is Taxes the IRS, and you will be right back to talk to Dave Cole.
Visit us on the web at www.gartlandlaw.com.
Hi, everybody. I'm Bernie Gartland. Let me introduce you to Kimberly and Brian from American Tax Centers.
When filing taxes, you want them done quickly and accurately.
We have over 24 years of tax preparation experience. And speaking as a former state auditor, we know accuracy.
Whether it's current year or prior year tax returns, we know that our experience will work for you.
So call us today for a free consultation and peace of mind to know that your taxes are done right.
Hey everybody, welcome back. This is Bernie Gartland. Name of the program is Taxes, the IRS and You. And today we are going to tell you how to structure your investment strategy so that you are protected and also you don't violate federal law, like in certain investment strategies, some scams out there that the IRS is attuned to. We want to make sure that whatever investment strategy you use is, number one, legitimate and also will protect your assets. So for that purpose, we have Dave Cole in studio today. Dave is the foremost expert in retirement structuring. And Dave and I have been talking about the differences between IRAs, investments, and 401 investments, and kind of given us a 38,000 foot overview. So, Dave, now we're going to talk about the implementation. Let's get down to the basics. What is the difference between a 401 real estate investment strategy and an IRA investment strategy, and what are the mechanics? What are the steps that are involved in this?
I think the best way to start that discussion, Bernie, is let's talk about something we're all familiar with, an IRA.
Okay.
Most people have an IRA or started one.
Right.
And, of course, the whole intent is that over years, hopefully, that IRA continues to grow.
Right.
We've been through some real challenges, all of us.
Yes, indeed.
It has gotten worse, not better.
Yeah.
So people are getting concerned. They're saying, if I'm going to have this money to retire in the future, how do I grow it? Because the roller coaster thing of stock market is killing me.
Right. Right.
And they want to be more involved. So they look to their IRA and say, well, how can I diversify it, for example, into real estate? They find out that they can, but again, they end up operating in a very tight little box because the IRA tax code is very restrictive on what you can and cannot do. It doesn't have the flexibility to be easy to use for real estate.
Okay.
So that ties in again to why so many professionals are attending classes, just to learn what the solutions are. The good news is I'm aware of those things, so I want to provide the solution to these professionals and their clients.
Right.
So 10 years ago, the story changed. 10 years ago, and people are still pretty much unaware of it, but clear back in 2002, Congress changed the rules. They had a massive piece of tax legislation, I mean just big, thick piece of tax legislation, the Economic Growth Tax Reconciliation Act.
Okay.
And hidden inside this stack of paper was an absolute gem, a golden nugget for people that wanted to diversify their retirement plan into real estate. It wasn't for IRAs. They actually created a new type of plan. So what they did is they didn't start with just a blank slate and create something new.
This is a genesis of a new...
It's a genesis of a new plan 10 years ago.
Interesting.
Absolutely. What Congress decided to do was they took a traditional proven retirement plan,
Okay.
and they just slimmed it down. They put it on a diet. They took the traditional 401k plan that most people have contributed to during their working career, and they got rid of all the complicated stuff. They got rid of all the bonding and the reporting and all of these things. Their intent or purpose was to make it easy for people like you and I to use it because it's more flexible than an IRA. We knew it was coming, but you know how when Congress talks on one end, what
Right.
comes out the other end
Right.
isn't always the
Right.
same.
Right.
But I got to tell you, Bernie, they absolutely knocked it out of the park.
And what did they do? What are the steps involved that they're saying that you can now do that you couldn't do before?
Well, the interesting thing about it is that when you step over from the IRA tax section
Right.
to the 401 tax section governing
Yes.
these plans,
Yes.
the rules are different. You don't have the same prohibitions or restrictions because 401ks were designed in the beginning, clear back in the 70s, to be more flexible for people. So if you were to compare them side by side, and as I educate people or work with people around the United States, one of the first things I provide is a side-by-side comparison for them.
Okay. Okay.
When you compare it with an IRA, self-directed IRA that they're trying to put in real estate versus
Right.
our brand we call a real estate 401k plan, the differences are amazing. The first one, there's no custodian involved.
Well, and you put together a sheet that you give out to your the people that attend your lecture, and I'm looking at number one here: no custodian required.
Right.
Right. That's amazing because if you looked at any investment strategy with your IRA, there always had to be a custodian.
By law.
Right.
By law, it says a bank or trust company has to be the custodian.
That's a big step.
It's a huge freedom step is what
Right.
it is. So the tax code says that the individual or married couple can operate as the trustees, the managers of the plan, that they don't have to have some other company out here controlling the purse strings, that they can control the plan themselves. Now, there are a couple of rules. You do have to qualify.
Right.
This isn't for everybody, Bernie.
Right.
For example, there has to be some kind of entrepreneurial activity that the person or married couple's involved in. It could be something as simple as having regularly scheduled eBay auctions, selling things,
Okay.
and running it like a little business.
Okay.
Because a 401k is a benefit of being an entrepreneur. So when I talk to a lot of people, it's pretty easy for me to see how they, or help them see how they qualify.
Right, right.
But that is one of the requirements. So assuming that they do qualify, and it's easy to do, they, number one, come into control of their own plan.
So you have no custodian, and you have the principals involved can control their own strategies within their own plan?
Oh, absolutely.
Okay,
Absolutely.
This is very interesting.
They choose their own investments. Now, if they want to have stocks, bonds, and mutual funds, that's fine.
Yeah.
But if they want to buy that building lot over there, or a real estate note that's performing, people are making payments on,
Right.
or tax liens, they're able to do that. They don't have to pick and choose from somebody else's predetermined list. They can choose whatever fits their needs the best.
It's very interesting because as you're relating all this to me, and we were talking about the IRAs, and the IRAs now, the traditional IRA, the Internal Revenue Service really frowned upon having the individual owner have any investment strategy and control on it himself. But now there's new set of laws that says, yes, the individual can. And this is very interesting because 4 years ago, I represented a client at tax court. And at tax court, he had created a new custodian. He transferred his IRA money, about $2 million, into this custodian account, ordered the custodian to form an LLC. The money from the IRA was transferred into the LLC. He became a non-participating manager of the LLC and was given what we call checkbook authority.
Right.
And he now could do his own investments. However, the IRS didn't like that. And I was confronted with 5 agents from the IRS and attorneys from Denver, Colorado, Connecticut, Washington, D.C., Oregon, and San Diego. We were on telephone conferences all the time because they did not like that. The Internal Revenue Service did not like that. So it seemed to me that since then, they have been trying to attack this and attack this. But what's great about what you're saying is now, there is now law that supersedes anything that people have, that they don't like about the investment strategies with IRAs. We now have law in the books that you're talking about that allows people to have their own investment strategy.
Absolutely. In fact, Bernie, this law goes back to the very inception of 401ks. They were designed to give the owner of the business control of their plan for the benefit of themselves and their employees.
Isn't that interesting? Listen, we're talking to Dave Cole. When we come back, we're going to go into more of the steps involved in creating your own wealth, I guess, within your control and within certain protection parameters. So when we come back, this is Bernie Gartland. The name of the program is Taxes, the IRS, and You. We're going to continue this conversation with Dave Cole.
Stay tuned. Bernie will be right back with more tax solutions.
Well, it's that time of year again. Yes, it's tax preparation season again. Hi, I'm Bernie Gartland. For years, we at Gartland Law have been preparing your prior year's unfiled tax returns. Well, we also have the ability to do your current year tax preparation. If you haven't filed tax returns for several years, or you simply want us to prepare the current year tax return, we can help. Call us today to set up your tax preparation appointment. Hey everybody, Bernie Gartland, welcome back. The name of the program is Taxes, the IRS, and You, and we have David Cole in the house today, and he is the foremost expert in setting up proper and capable retirement programs. And we're talking about 401ks versus IRAs versus the fact that sometimes the IRS doesn't like certain things, but they can't complain because there is laws on the book that say we can structure things properly and legally. And I think I'm going to ask Dave to give us a little bit of synopsis of, let's say, Tom and Carol. Tell us about Tom and Carol.
Okay. Let's make Tom and Carol somebody that your viewers can identify with.
All right, that's what we need to do.
Tom used to work for a company. He had a 401k. When he left the company, he rolled it over to an IRA.
Okay.
His wife has been funding an IRA through her income for several years. They like some of their investments, but they see a lot of really good opportunities in real estate right now.
Okay.
They see real estate notes that are paying 10, 11, 12% that have a long history of payments.
Right.
They would like to buy those as investments. Right. But they find out that inside the IRA, it's really difficult for them to do. So let's just assume they qualify again for the 401k. How would it help them? Well, as we talked earlier, one, they are now in charge of their plan when it's structured and set up.
Right.
By law,
right.
That's a good point. By law, it gives them that privilege.
That is really important that people understand that this is just not something that we're creating out of the air. Right. It is what you're putting people into the strategies involved are absolutely outlined in the law.
Absolutely.
Okay.
Given as a right and a privilege in the law. So in structuring a plan for them, the first thing that I would do for Tom and Mary, or Tom and Carol, is I would make them co-trustees, co-managers of the plan.
Of the 401k?
Right. They both run it. They're together with the plan.
Okay.
They get to choose their own investments. So if they want to buy a building lot or real estate note or fix and flip a property, they can do that. Okay. That's their choice. But you know, Bernie, to be able to do that and really make it convenient, they've got to have checkbook control. So when I set it up for them, I help Tom and Carol bring their money down into one pooled account. In fact, I work with one of the biggest banks in the nation. I train an internal team for them so they know how to open up the checking account for the plan. The bank doesn't control it. They just offer a checking account. So Carol's IRA comes down into the 401k. Okay. Tom's comes down in the 401k.
Okay.
The money is pooled. Now they've got some investment horsepower. And that checkbook, they hold it in their hand. They control every penny that's inside that account. And they can, for the first time in their lives, actually become proactively involved in their plan and decide which investment they want to do.
And that's important. They can pick and choose their investment that they want.
Absolutely.
They can do their own due diligence. And then they can say, no, that's not one I want to invest in. And then, I do want that one. And they are in control of their own destiny.
There's a saying that I share at my workshops. I say, you know, the old saying that be ready when opportunity knocks on the door. Well, it doesn't knock anymore. It runs right past your door. So if you're not ready to tackle it, you're going to miss it.
And in this day and age, I know down here where we are locally here in the Coachella Valley, holy cow, there are so many investment opportunities that if somebody has checkbook authority over their own money, they can make and pick and choose their investments. That's incredible.
Exactly.
That's incredible.
So it really does give people back control. They take back control of their retirement future. Now, that comes with responsibility, Bernie. I mean, they have to do, you said due diligence.
I'm not sure I'm going to like this aspect, but go ahead.
Well, no, you stop and think about it. And people say to me, Dave, this is awesome. You mean I can be in control of my money and I can have the checkbook and all that? And they say, that's got to be amazing. And then they'll ask me, well, what's the downside?
What is the downside?
Well, the downside, Bernie, is you're in total control of your retirement plan and you have a checkbook to every penny.
Yeah.
So you have to be responsible with your money.
I got it.
You've got to do your due diligence.
Right.
You've got to make sure it's the right investment and work with professionals that can help you determine that.
Right.
But it really does set people free to accomplish a lot of their goals. So
that's interesting too, because what you're saying too is that even though you have a checkbook authority, you're not on your own. You still can go and ask questions and investigate with other professionals as to maybe I'm thinking of investing in this business. What is your thought, Mr. Tax Attorney or Mr. CPA or Mr. Financial Planner? And you can gather up all this information, then you make a decision based on information that you have received.
That's exactly right. Nobody should go it alone. You may have control of the money in the checkbook, but you need to make sure that you have the proper input from your other advisors.
And this is where, I guess, and I'm going back to the first segment of our program here, is that when you are instructing all the CPAs, financial planners, etc., this enhances their position, that they can have clients go into this aspect and use them for advisors. So it's not like you're taking away an income producing area for CPAs, financial planners. You're enhancing the program, making them look better than even before.
Exactly.
Okay.
So the way I approach it for people is I just don't structure the plan and say, here it is, I hope you make some money. Now, I don't sell investments myself, but I teach the strategies of investing. And then I'm more than happy to work on the team, as it were, along with their financial professional, maybe their CPA or their tax attorney or others, so that they understand the picture. And together, there's a saying, perhaps you've heard it, it takes a village to raise an investor.
It takes a village to raise an investor. Okay.
As a team, we could help them be successful.
Okay.
And that's how people need to approach it nowadays. With the challenges and the opportunities, they need a team to help them be successful.
Interesting. And you're teaching those professionals how to be that team.
How to be on the same team, not be at odds with each other.
What happens if some of the people out there are listening to us talk today and they say, well, wait a minute, I have talked to my CPA and my financial planner, and not only they tell me this concept doesn't exist, but they're really not trying to push it. You have the ability to talk directly to people who want to learn more about in their 401k and investment strategies. Is that correct?
Yes.
Okay. So if the folks out there want to get in touch with you for let's say a conference call or setting up a workshop, a seminar, wherever, how do they do that? How do they get in touch with you?
The easiest, of course, if they have the internet, is go to...
Everybody has the internet.
It's sitting right here,
It's sitting right here, right? Yes.
Just go to my website. It's simplest. It's www.realestate401kplan.com.
Say it again slowly.
Okay. www.realestate401kplan.com.
Okay. And when they go to that website, what are they going to see? What are they going to learn?
Well, there's going to be some information they can download. We call it an investment freedom discovery package.
Okay.
We're going to have information in there. We're going to compare it with IRAs. We're going to lay out all the benefits. We're even going to send them to the IRS and Department of Labor pages.
For their
they
rulings.
Can go read it themselves.
Well, this is so instructive. I'm glad you're here, because this creates another attribute of Taxes the IRS and You. It's all not naysaying all the time that we normally get in. We get clients that come in that have major problems. You are presenting a program to create something for the future of people, and we really appreciate that. Name of the program is Taxes the IRS and You. If you want to go to my website, it's www.gartlandlaw.com. If you have questions or comments, email me at bernie@gartlandlaw.com. We want to thank Dave Cole for coming in. Very, very good, and I hope lots of people go to your website.
I'm glad to work with them.
Okay, Dave. Thank you very much. Okay. Well,